GoodWill mission here is that we provide jobs for individuals and improve the quality of their lives. And we're trying to help people in the need to reach their fullest potential through the power of work.
Our mission is to provide job training and employment opportunities for individuals with challenges and severe disabilities. The way in which we fund the mission of the organization is through our retail operations.
GoodWill is known for donation centers across the United States and Canada. It's important to recognize that we are a $4 billion organization where 84% of that revenue goes back into job training for our clients and for their families.
Although it may not be the most glamorous, the accounting function is one of the most essential elements of any type of organization. The way a company manages its accounting practices greatly affects its stakeholders.
Stakeholders for the GoodWill organization would be the general public, creditors that we work with, vendors that provide us services, government agencies that we get grants from. But really the primary stakeholder is the general public. We do provide our audited financial statement in the Form 990 on our public website.
It's important that when a donor makes a donation to the organization that they know we are financially stable to safeguard the funds which they've so generously donated to us.
Accounting not only deals with recording all transactions, but also sorting, categorizing, and analyzing those transactions. It helps provide a better understanding of how much money is coming in compared to how much is going out. It also helps management make informed decisions on how it is spending its resources and how to better prepare for the future.
The main sources of revenue is approximately 55% comes from the retail division, or sale of donated goods and contributed goods. 37% comes from the contracts division, which provides custodial, janitorial, lawn maintenance service contracts to the government agencies. 8% comes from grants from foundations, corporations, individuals.
Accounting is an important function for all types of businesses, whether they are large publicly traded for-profit companies, small private firms, or nonprofit organizations such as GoodWill.
GoodWill is a not-for-profit organization. We run just like a business, just like every other business. It's a for-profit business. We do have our revenues and we do have our expenses and we do have bottom line. However, they have different names for them. We have revenue and support for the revenue pieces, and then we have direct and indirect expenses for our program services, and then we have G&A, general administrative services. And we have what's called the bottom line, or other people call net profit. We have what's called net change in assets. The concept is pretty much the same as far as accounting.
There are plenty of opportunities in the business world for accounting professionals. Within the general field of accounting, there are 5 major areas of practice: managerial, financial, tax, governmental and not-for-profit accounting, and auditing.
It's extremely important that an organization not rely heavily on financing to meet its day-to-day operations, because it is not sustainable in the long term. That is extremely important for the viability and sustainability of the organization.
Accounting for GoodWill falls into the area of practice of government and not-for-profit accounting. Organizations like GoodWill are not in business with the primary intent of making profits, rather to provide special services to different groups and individuals.
We are a public charity, so therefore we don't use the revenue to support any particular legislation or any particular candidate. So that's another rule for not-for-profit organizations.
Even though an organization might have a not-for-profit distinction, it still has to make enough revenue to pay bills and keep track of how it spends its money. This has become more important in recent years as donors want to see how their donations are being spent.
Source documents that come into the finance department, we typically will analyze those documents to determine the appropriate way in which they should be recorded. However, the journals must first be reviewed before they are posted to the general ledger. It's very critical in any accounting process that there be steps along the way for review and analysis of the transactions. We have trial balance to make sure that everything is in balance, that the account reconciliations all tie out. We also use online resources such as access to our bank accounts so that we can reconcile transactions on a daily basis even, to ensure that we have a proper picture of our cash position at any given time.
Let's take a deeper look into the practice of accounting at a typical business. There are 6 steps in the accounting cycle, which is how companies prepare and analyze their financial information. Bookkeeping is when all transaction documents, such as sales slips, expenses, and travel records, are analyzed. Every transaction is recorded into daily journals and are then transferred into a ledger. This is where everything is categorized, so management can find all financial information about a particular account in one dedicated place. A trial balance checks all the figures in the ledgers to make sure they're balanced. If so, they are incorporated into the organization's financial statements where they can be analyzed.
Once we have a trial balance prepared, we will then prepare preliminary financial statements. We look at budget versus actual, and we look for any significant variances. We also distribute them to the department heads so that they can look at their own statement of activities to ensure that the results are actually in line with their expectations. Once the financial statements have been finalized, we also do ratio analysis. We have a number of benchmarks that we use to compare our own progress, and we also compare ourselves to others in similar organizations.
Because accounting can be so complex, companies look to technology to assist them in the process. Larger organizations use technology to post journal information in real time, so the people that need to know can view it anytime and remotely. Small businesses often use accounting software, such as Intuit's QuickBooks and Sage's Peachtree, to make life a lot easier for them.
We have a sophisticated software package. It's a general ledger system. It has accounts payable, accounts receivable, and fixed assets subledgers. We also have a point of sale platform which is used at our stores. And all of these systems must reconcile.
Financial statements help determine if the organization is financially sound or not. There are different types of financial statements. A balance sheet provides financial information on any specific date. An income statement highlights total profit or loss for a particular period. And a statement of cash flows helps track money coming in and going out, notably cash receipts and payments.
We have a statement of activities which would be equivalent to an income statement for a for-profit entity. We come down to a bottom line, which is a change in net assets versus net income in a for-profit entity. We also have a statement of financial position, which is the equivalent of a balance sheet. And the statement of financial position actually has net assets instead of a shareholder's equity section.
A balance sheet also lists assets and liabilities. Assets are things of value owned by the organization, such as buildings, equipment, patents, copyrights, and other items. Liabilities are what a company owes, such as accounts payable, notes payable, and bonds payable.
Our assets are made up of cash, we have investments, we have accounts receivables, and we also have property, plant, and equipment, pretty similar to any other for-profit entity. On the liability side, our organization would have accounts payable, accrued payroll, and we also have a line of credit, which fluctuates from day to day depending on our cash needs.
An income statement paints the company's true financial picture by capturing profits after costs, expenses, and taxes have been paid. What's left over is called the net income, or if there isn't anything left over, it's referred to as net loss. Income statements incorporate revenues, cost of goods sold, gross profit, expenses, and net profit or loss, which is the balance after deducting all expenses before taxes.
Statement of activities, which is comparable to an income statement for a for-profit entity, has the revenue section divided up into 2 categories, revenue and the other one is support. On the expense side, we do have a cost of goods sold. We do have operating expenses similar to a for-profit entity.
A cash flow statement is important because it shows how much cash is on hand. Cash flow analysis is a very important exercise because it allows organizations to see how much cash is coming into the organization, what is still owed to them, and how much is being paid out. Customers who do not pay on time can put a company in serious cash flow trouble, and in some cases, out of business.
We are constantly assessing and reassessing the cash that has come into the organization to see whether maybe some of those expenditures might need to be postponed. The single reason why so many new organizations do fail is because they don't have adequate financial resources. It is definitely a critical component, and we monitor this very closely.
Successful organizations, large and small, analyze their accounting reports and statements to better understand their financial situation. Many incorporate performance ratios into their analysis. Ratio analysis on liquidity, leverage, profitability, and activity is conducted to further determine an organization's financial health.
Some of the ratios that we look at would be what percentage our expenses are to our revenue. Are we generating a profit? We will look at this ratio for donated goods division as well as the organization as a whole.
One of the positive aspects of doing ratio analysis is that we look at who's top 25 in retail, top 25 in contract services, top 25 in program services for our members. What that does is it provides members an example of where they get the best ideas, and they do a lot of collaboration as far as providing services for the community. That's what we're doing with our ratio analysis.
There are several important functions accounting plays into the potential success of an organization. Is there a function that interests you?